a stunning miss. Any way you look at it with this jobs number. Is it a real number? Teddy Weisberg just walked past me as he was leaving, and he said, why does anybody pay attention to the numbers? If we like the July number, it got downwardly revised. Sometimes they're upwardly revised. How much stock do you put in what looks like a very bad number today, Tara?
Well, I think what's really surprising about this number is how low it was compared to the record job openings numbers that we got from the JOLTS report back in earlier this month, reporting at the end of July that we had 5.8 million job openings. So we're thinking employers are saying they want to hire, but yet they're not actually filling those positions. And it looks like they're not raising wages enough to entice people into the jobs.
Okay, so Ward, you're the expert when it comes to the Fed. Does this completely eliminate a rate tightening this year? Yes or no?
No, I don't think so. I think it probably takes October off the table just because they'll want to see one more employment report just to make sure this isn't the beginning of a trend. But we've had a lot of improvement in the labor market. And really, the big problem for the Fed in delaying liftoff over the past several months has been the inflation picture, which is pretty much driven by energy prices and commodities in general, which have caused import prices to be weak. So if we get stability in energy prices, stability in commodity prices, and we see that the labor market starts going back to its trend, I think that the Fed will be inclined to implement liftoff in December.
That's a lot of ifs, Dagen. But yet the markets today managed to squeeze optimism out of this market like blood from a rock. The Dow is now up 135 points, having been down 259. Why?
One, the jobs number was weak enough to keep the Fed from doing anything, at least this month, as Ward was just talking about, but not weak enough, not at least not yet, to signal a recession on the horizon. My biggest concern is there is optimism out there, particularly among consumers. Pickup in consumer confidence, optimism about the jobs being plentiful, the highest it's been in 8 years. You have auto sales running at the best pace in more than 10 years. My concern is people talk down this economy, and that could actually send us into a recession if you change the mood.
It's hard to talk down an economy that is globally based. You know, we're living in a global economic system. And by the way, economies around the globe, our trading partners are slowing down dramatically. And I will say this, if I were a financial advisor, and I'm not, okay, but if I were, I would tell my clients not to trade off these numbers today. They're completely conflicting. Think about it this way. You have a lousy jobs report and you have energy stocks going up. Makes no sense. I mean, that's contradictory.
What Teddy said walking past here.
Totally contradictory. We have a lot of stuff out there. No one knows what the Fed's going to do. By the way, the Fed may have to raise rates, not just because the economy is better, but because you need something if, we go into a recession next year, you need some room to cut. So the Fed is in this kind of catch-22 where they probably don't want to raise rates now as the global economies are slowing, but they might have to for a lot of reasons.
But wait, let me jump in here, Ward. Has the Fed gotten us all stuck in a negative feedback loop? In fact, it won't raise till the economy improves, but the economy won't improve until it gets the signal from the Fed that the economy is good enough to move higher with a rate tightening.
Well, as was pointed out earlier in this program, the consumers have already gotten the message that the economy is okay. It's okay to spend. It's okay to feel better about the world. And frankly, I think that that's what matters the most, because the consumer sector is the biggest and most important sector of the economy. And yes, it's true that our trading partners are slowing, but we have a lot less exposure to slowing economies overseas than they have to us slowing. So, we'll take a little bit of a bite out of us, but I don't think it's going to cause us to turn down in any significant way.
Tara, help us see a silver lining in this jobs number.
Well, I think a couple of areas to look at. Healthcare and information both saw strong job gains. And I think looking forward, there's still a lot of opportunities for people across the board. If you look at job postings on Indeed or the JOLTS numbers for job openings, it does look like employers are starting to really open a large number of positions. So the next step is for them to make those really appealing to attract people into them.
Dagen, you were bringing up the JOLTS number, best that we've seen since they've been keeping records. But earlier on Neil's show, on Neil Cavuto's show, he had Foster Friess, who made a lot of money investing correctly. And he said don't invest in the stock market, just invest in good companies. And maybe that is the message.
Well, I would invest in a great American company these days over lending money to Uncle Sam at under 2%, which is where the yield on the 10-year Treasury was today. You look at the yield on the S&P 500, just it's about 2%, a little bit north of 2%. So, I get at least a yield, maybe capital gains on stocks, but I'm not even beating inflation on a 10-year.
But here's the problem with investing in this environment. When you have 0% interest rates for as long as we have, it changes the dynamic. You know, the markets are not based on fundamentals anymore. They're based on, you know, what the Fed might do or might not do. And the Fed might do what it might not, or do what or not.
But you don't need to work.
Let me finish what I'm saying. Based not on economic reasons, but because there are bubbles out there. And I think that's the danger with investing in this market. It's, you know, you have this sort of, the Fed is always a force in the market, and we always know you can't fight the Fed, but it's never been so important as it is now. And it makes it very difficult for the average guy.
But that's to Liz's point. If you invest in a company, Charlie, and hold it for years to come, then you really aren't betting with the Fed. You're betting on the future of that enterprise.
But here's what's going to happen. If the herd mentality changes because of some reason, it takes down everything.
Short term, though. Short term. I really get it.
2 years of short term is pretty nasty.
We want to focus on the short term now. Market is up. We want to thank Tara. We do appreciate it. Ward McCarthy, Charlie Gasparino, who says himself he has no expertise. I disagree with you.